Welcome to ShortView Trading, it's your morning market hit for Friday, 25th of September. What matters today for traders? Well, what a fascinating day yesterday, and I would suggest that markets are clearly trying to find a floor at the moment, trying to base build. That's most obvious in indices like the NASDAQ 100, which of course is where the selling started in this pullback back in early September. That had the most vicious pullback initially, and looks the most convincing now in terms of base building. And you can see that in the chart in front of you now. The NASDAQ 100 yesterday held its intraday lows from earlier this week. Those lows we saw on Monday this week were held yesterday. That's encouraging. And in the S&P 500, it wasn't dissimilar, albeit there was a dip briefly below those Monday intraday lows. Not quite as convincing, but certainly we saw a strong rally later in the session from those lows, which was encouraging in that respect. Equally, places like the Philly stocks, often a leading indicator of risk appetite in the US market. The Philly stocks often leads the NASDAQ 100, much more convincing over recent weeks. Having made an initial intraday low on 8th of September, it held it on the 21st, Monday this week, and it held it again yesterday. So that's a triple test of that support level. That's quite a convincing base building, and that's quite encouraging in terms of the Philly stocks, as I say, often being quite a leading indicator of the NASDAQ and a leading indicator of appetite for risk in the US equity market. But it's not all markets. Those that were late to the selling party aren't as convincing. The Shanghai Comp over in China we're showing you now. You can see that remains very much in a downtrend. You can make similar comments about certain other Asian indices. So it's not clear, it's not across the board, but clearly those that came first, those that started weakening first, selling off first, are those that are building a base first. Encouragingly also is the behavior we've seen in credit markets. So bond spreads, high yield bond spreads, the triple C, the lowest rated bond spreads above the default, the D level, all of those have behaved reasonably well in this pullback, which suggests it's not a broad-based macro event that's particularly troubling. It's simply an expunging of the initial froth that we saw in the tech area and other parts of the global financial markets as we got into early September. So it's encouraging that those spreads aren't widening too much. It's encouraging that we're building a base. And it's also encouraging what the message of our models is, both our short-term models, which you use on a 1 to 2 week basis, but also our medium-term models, which we use on a longer-term basis. Increasingly, we're getting that buy message across the board. It's most obvious in the short term. It's increasing in the medium-term models as well. So to see how we're playing this, please see today's Daily Rag available to subscribers and on the website. So what are we watching today? Well, today is about Eurozone money supply data, M3. That's the key monetary metric that the central bank, the ECB, watch. You also get monthly loans to households and businesses. That's always interesting out early on this morning, London time. And then over in the States, durable goods orders, often key. That's an insight into the CapEx cycle. And then, of course, there's no key speeches today, but we do have lots of discussions ongoing in the US between the Democrats and the Republicans about the potential back on the table for another further stimulus package. That's critical for market direction and critical for how the macro plays out from here. So that's it from us. That's your morning market hit for Friday, 25th of September. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading or follow us on Facebook, Twitter or LinkedIn. Thank you for listening. Stay safe. Trade well.